Good afternoon. I appreciate it's been a long day, so I'll be as quick as possible. Galane was set up in 2011 on an asset in Botswana, which it acquired from Gold. It was an unloved asset, but should be because it wasn't the right size for Gold. When we purchased it, it had about 1 year's life left in it. That obviously isn't the case, as we're still producing there. Last year we produced around 36,000 ounces at an all-in of 1,050. It's got about 3 years life in it on the current resource, but we try to replace what we mine. So hopefully next year, when I do the presentation, I'll be talking about 3 years again. The important thing we did there is we transitioned it from an open pit to underground. By doing that, we reduced the all-in cost down from 1,450 to 1,050. But also we spent time on the processing plant, increasing the recoveries. In 2015, we acquired Galaxy Mine, which is down in South Africa. We purchased it for a couple of reasons. One, it's only 8 hours between the two assets, so it's easy for me to transition management between the two. All of the goods and services that we get would come from South Africa, so we already had all the contacts. It's greenstone, which is the same as Mopani. The mining method is the same. It's metallurgically difficult, same as Mopani. So for us, it seemed like a good fit. And the idea was, once the management team had turned Mopani around, which we've now done, was then to restart Galaxy. Galaxy, in fact, we've worked very hard. We spent a couple of years putting the order mining license in place, environmental permitting, etc., and raising the funds. And we drew down on those funds in January this year, and we produced the first concentrate in April, and we hope to be up in full production next year. So 9,000 ounces this year and 26,000 ounces next year. Management team, there's myself, around 15 years experience in mining now. I've worked in Zambia, in the Congo with Katanga Mining as the CFO there, then across to Zimbabwe, and I've been with Galane now for almost 6 years. When I joined, I needed to increase the strength of the team, and I brought on Wayne. Why did I bring Wayne on? Wayne's got 30 years of experience, and he transitioned 2 open pits into underground, so he had that knowledge. Also his metallurgical background. You know, each 1% recovery to us is 500,000 cash on the bottom line, so it's very important. He brought his own team in with him. Kevin's an example of that. We're not an exploration company, we're a production company. He's a geologist that goes underground and licks the rocks and tells me where to go mining next. Gavin came and joined us a couple of years ago. He's on the finance side. He worked with me at Glencore. And then Cedric has just been made the general manager at Mopani. When I started at Mopani, there was 18 expats. We're now down to 2, and we basically transitioned the skills across. But the idea was always to do that so we could then take that senior management team and move them on to the next asset. Company-wise, ownership structure, we're all very heavily invested in the business. 54% is held by management and insiders, so we're very concerned about what happens going forward. We have a small free float of around 23%, and that's all retail. We don't have any investor coverage, but we haven't been able to raise any money on it, so we wouldn't have any investor coverage. We do have some paid research with Edison, which is worth looking at. I think if you look at our valuation, 10 million CAD, you're going to say, well, why is that so low? And it's a valid question. There's a couple of things that hold us back. I think, first of all, you know, the lack of investor coverage. Secondly, we do have debt in the business, and we have around $15 million. Half of that is royalties owed to the Botswana government, and that was really incurred while we transitioned from open pit to underground. But we have a plan to pay that back, and we should have that repaid by the end of next year out of free cash flows at Mopani. And then the other 7 million or so is to do with debentures, and that's old shareholder loans that we took on when we acquired Galaxy. Half of that's due in November this year, and the other half in November 2021. But again, we can manage that through cash flows, so not something that concerns me. I won't dwell too much because of the time on Mopani, but last year's results are worth looking at. 36,000 ounces, cash cost at Mopani itself are $933, $6 million worth of free cash flow at operations level. So it's a strong asset, and I believe it's got a long life in front of it. This is the main ore body, Tau. This is where we did the transition from open pit to underground. We've got a drilling program going this year to extend life at depth. and we should have results out towards the end of the year, so it'll be worth looking for those. We also have an exploration upside. At the end of last year, we signed a joint venture with B2 Gold. B2 actually approached us because their guys were the guys who actually found Mopani historically. They're spending $4 million over the next 3 years. That would buy them 70% of the joint venture. It's a free carry for us up to a feasibility study if they decide to go there. If you know B2, you know they're obviously looking for a 1 million ounce reserve or 100,000 ounce per annum mining. So it's a big opportunity for us to have a 30% free carry. If they don't find anything, then they have the ability to walk away and leave everything behind. And that's good for us as well. If they only find a 200,000, 300,000 ounce asset, well, that's great for the extension of the life of Mopani. So for me, that's a good opportunity for Mopani that's not costing us any money. Galaxy, I've already touched on the advantages of why we went there. I won't go too much into the detail here. There's a slide here which I like, which is the actual asset itself. So the asset we acquired was in care and maintenance. It had a 15,000 ton plant, and it's had 21 ore bodies. There's been mining here for over 100 years. So if you look at the actual picture we got there, the grey areas is where it's been mined historically. Red is the measured and indicated, which is 600,000 ounces. And the orange is the exploration potential, which is up to 4 million. And there's a plan there already to drill that out. Where we're going is just to 2 ore bodies, the one on the far right called Galaxy and the one on the far left called Princeton. We're already in Princeton. That's 5 meters wide, 100 meter strike, runs at 5.5 grams a ton. It'll be mechanized mining, the same mining method that we're using at Mopani, and in fact the same contractor. And we've already produced first ore from there this month. So we're ahead of schedule. And we'll be producing about 10,000 tons a month from there. The ore body on the right-hand side is Galaxy. Galaxy's at the end of 22 level at it. It's going to take us a few months to get there. But that's 40 meters wide, 100 meter strike, runs at 4.5 grams a ton. And the idea is to be mining around 20,000 tons per month from there. And we should be up and producing at the beginning of next year. So this year, 15,000. By September, we'll have increased the plant size to 30,000. We've actually oversized the equipment there to 50,000. So we've got a new mill coming at 50,000, crush at 50,000 as well. And we've got the opportunity to expand. So we think around 9,000 ounces in production this year, stepping up to 26,000, and then a plan to take that up to 60,000 in the long term. And again, the ability to scale that up. So it's a great asset to have. Where are we at? Basically where I've said. We've restarted the 15,000. We've produced first concentrate. That concentrate's been sold to Concord Resources. Because it's refractory, concentrate is the best way to go. We get a better recovery out of it, 75%. We've got lots of goals this year. We've met a few of them already. We're a little bit behind on some of them, but we'll catch up with those. And the idea is to be in full production by the end of this year. How does that look in a model? Well, you know, as an investor, I have to say the first 3 years is obviously based on resources and supported by technical reports. After that is my view of the world. But there's potential for us for next year to be a 60,000 ounce producer and producing, you know, 16 million worth of free cash. The next 3 years will really be us paying debt back. But after that, the potential is up to a 90,000 ounce producer at an all-in of less than 700. So there's a huge upside here. If you were going to buy shares in us, I'd say it would be a good idea. Where do we sit at the moment? Our PNAV is at 0.05. We're basically valued as an explorer. If I look at where we could perhaps go to, Shanto I put on there because they're a 60,000 plus producer. They're in a difficult environment, Tanzania. They did have debt issues, but they resolved those. And so really I should be aiming for about a 0.3, so a 6 times re-rating. So when the market comes back to us, I do believe the potential is there. When I reach 60,000, I believe the potential is there. Thank you very much.